All right, everybody. Ty Brown here, Lexington, Kentucky Real Estate, Weichert Realtors, Bluegrass Living. Today I got Brad Hacker from Benchmark Mortgage. Just want to ask him a couple questions. As you can see, I've got my book here and don't have anything written down on it, so it's unscripted. He don't really know what I'm going to ask him, and I don't even know what I'm going to ask him at this point. But again, Brad Hacker, I've been working with Brad for about 6 or 7 years, you know, he's kind of my go-to guy when somebody needs a mortgage, or at least even if they've got somebody they work with, I'll ask them, hey, probably call this guy, get a second opinion, and kind of see who works best for you. Good thing about that, like I said, is if there are issues that come up, I kind of know how he works, and he knows how I work, and it works well. I'm not obviously the only realtor he works with. He's got that relationship established with several realtors in town, which is great. But like I say, knowing how to work with somebody is a big deal, and it's a real advantage to you as a home buyer, or even if you're the seller, knowing that the buyer's agent knows that the buyer's going to be able to come to the table and know that they're qualified and that they're going to get the thing done too is a big benefit as a seller also. So it helps everybody all the way around. So let's ask Brad a couple questions here and let's see what he thinks. So if I have a buyer that I'm out working with and I have them call you, what are the things that you want to know initially, and what are the good things that a buyer can be prepared with on that first call to make the job quicker and easier?
Yeah, well, on the first interview call, kind of what we look for is just their basic information. We want to know, where they've lived for the last 2 years, where they've worked for the last 2 years, approximately how much they have in checking and savings, and a ballpark of what they have in their retirement accounts. And then the two big questions that we always ask anybody that calls is that, how long do you plan in the house? So that way we're making sure that we're giving them a loan that best suits what they're trying to do. And then what is their target monthly payment? So that way, it's been my experience doing this almost 9 years now that what people qualify for and what they can afford are two entirely different things. So, we always try to work backwards and figure out what they want to pay per month. And that way, so when we're talking to them about purchase price ranges, they're looking at houses that are in their purchase price ranges. So once we get all their preliminary information over the phone, we go ahead and schedule them to come into the office for an initial consultation.
All right, so here it is, 2012, and everybody listens to the how I love Katie Couric and all that. So
yeah, exactly.
You hear it all the time. Hey, I'd love to buy a house, but I can't get a loan. How often do you run into that? How often do people that are working with an agent want to go buy a house, they just flat out can't buy a house? How often?
A lot less than you would think. A lot less than you would think. I think that's a little bit of a myth that's in the market right now, that people can't get a home, and that's just not true. If you've got a little bit of money, you don't have to have a whole lot of money, and if you've got halfway decent credit, you can pretty much get a loan. So I think that's a little bit of myth in the media, that most people that we talk to, again, if they got a little bit of money and got decent credit, then most of the time we can figure out a way to get them in the house.
Tell me a little bit about what happens if somebody comes to you and they can't get a house. If if I had Joe Schmo come into you today and call you, and you say, "Man, sorry, there's nothing I can do." I know some people are never going to be able to buy a house. We know that, but what normal situation? What happens?
Well, typically what we do is that we go ahead and schedule that consultation on that initial interview, and if for some reason they don't qualify, 9 times out of 10 it's due to credit. So I have them go ahead and come on into my office. I usually give them a call and just let them know, hey, we're not going to be able to pre-qualify you this time, but I still want to meet with you because I want to, I don't want to tell you no. I just want to tell you right now, would you come on in and sit down with me for 30 minutes and let's teach you how to be able to get pre-qualified down the road. So they come in, I give them a full copy of their credit report. We actually go through it line by line. I kind of tell them what's good and what's bad, and make notes for them and things that they can do to improve their credit. We've got a credit scoring handbook that we give to the clients that explains to them how credit scores are figured. We kind of teach people what that means. That way, if they're they can't buy right now, maybe they can 3 months, 6 months, 12 months down the road.
What are some of the biggest bombshells you find that when people come in to buy a house that they don't think about that they can maybe eliminate ahead of time? Obviously, I'm sure they got to have a job. That's a big thing. But what are some of the most common things that they don't think about?
Well, one of the things, just a really quick thing, most people don't understand how credit scores work in relation to credit card balances. Like, it's a good idea to keep your credit card balances at about 30% of your limit. That way you maximize your credit score on those. So you see a lot of people who have that $500 Shell gas card that they got a $300 balance on it, and their score's really low. Well, if they just pay that down to, $90 or something like that, they could increase their credit score 20, 30, 40 points. So that's always a big one is helping them tweak their debt structure, helping them tweak their credit score, their credit card balances to make sure they're getting the optimal credit score. So that's probably the biggest one.
Okay. And I know mine and your favorite scenario, or hey, I've got a buddy that's works at a bank, or I got this quote online, or whatever.
Sure.
Somebody comes to you that thinks that they're qualified, and maybe we get them for a second opinion. Well, how do you approach that situation? I mean, obviously you can't give the farm away. I mean, everybody's got to eat, but
sure.
The service that you give, how do you do that? I mean, what do you find is maybe your best differentiator from the online guy or from Joe Cousin
sure.
at the bank?
Well, I mean, just the way we go about explaining things to the client. Our pre-purchase consultation is extremely in-depth. We talk to them, about the mortgage-backed securities markets, which is what makes rates what they are, what those are doing, right now, and what we feel like they're going to do in the time period that this person's looking for a home. We talk to them a lot about personal finance. I was talking with a person this morning, and I just made the comment that if somebody had just talked to people about, budgeting and having a few months worth of savings, that how many people, if they'd had 3 months worth of saving, 3 months worth of reserves, would have not lost their house. Talk to them about things like that, the market, their personal finance, and then we just talk to them about, their payment options. So it's a much broader, much more in-depth consultation than what they're normally getting at their bank or somebody they got through Lending Tree or something like that. So it's much more relational, it's much more high touch, and it's much more focused toward them. Kind of the cool thing about us at Benchmark is that we don't have set costs and fees. Our costs and fees are set specifically for the client for what makes the most sense for them, because what may be a great loan for you might be a terrible loan for somebody else. But typically in a banking environment, you go in and everybody kind of gets the same cookie cutter loan. Where with us, we actually structure the loan to where it makes most sense for that individual person, rather than just everybody getting, everybody who walks through the door gets the same loan.
All right, so your business card that I give out says you're a certified mortgage planner. Is that right? What's that?
That's correct. Certified mortgage planner just basically means that I've done some ongoing training in regards to how the mortgage markets works and understand the mortgage-backed securities markets and things like that.
Put you on the spot a little bit. What's your prediction for, here it is, going into spring, not hardly spring yet.
Sure.
We always know how things change, but what do you see, what's your personal opinion of what's going to happen over the next, say, 6 months, mortgage market-wise?
Mortgage market-wise, well, I think interest rates will remain low. Will they stay where, at a historic lows where they're at right now? Honestly, a lot of that depends on what happens in Europe. Most people don't realize that, in the global economy that we live in today, things that happen in Greece and Italy and things like that actually impact, what rate they're getting on their mortgage here in central Kentucky. So, a lot of that's going to be dictated by what's going on over there. And then the other thing is just, how fast the economy continues to improve. I mean, it's pretty much obvious now that the economy is starting to improve, albeit very slowly. If that starts to accelerate, then people will feel more secure. They'll start to take more money out of the bond markets, which will help to drive rates further. So I think rates will still stay, close to historic lows, for the most part of this year. I think where now you hear people talking about, now's a great time to buy. And so, they're starting to hear that from other sources than just realtors and mortgage people and things like that. So I think that's another thing that's going to further, perpetuate the market picking up and being a good year for us.
This might get a little too high level of theoretical thought, but I like that.
Sure.
I mean, don't you think people have kind of become numb to the fact that the rates are so low?
Absolutely.
I mean, I don't think that's a market driver at this point. How do you I guess you can't lead with the rate anymore. Some people still shop you.
Sure.
I mean, is that what you see too? I mean, do you think that people so what? They can be low forever. I mean, how do we combat that?
Well, I mean, I think that the education piece, and that's something we do really well at Benchmark, is making them understand how rates actually work. I mean, I really believe a lot of people think that just the bankers come in the morning and just make up what they want rates to be that day, and that's the rate. And it doesn't work like that in today's market. So, with that being said, we just, they need to be getting a good education on what really makes rates move, and that, as the economy improves, that's going to make rates go up. So I mean, just the education piece of it that they're not getting in those internet environments or with their local banker, that's a huge part of it. And
now you can't see it because the blind's down. Well, there's a billboard back there that says they can get 3% and no money down and no fee. Can you do it?
Yeah, it's probably got a good, really good looking person.
Well, so what kind of programs do you find? I know you offer conventional FHA,
sure.
VA. I mean, tell them some of the programs that are available out there to people.
Yeah, well, most people don't realize these days that, 5 years ago, when a lot of people had gotten their last loan, the mortgage industry was a lot like a Baskin Robbins. There were 32 different flavors of loans that we could do, and pretty much anybody can get a loan. Well, nowadays, really, the only loans that are available are either conventional loans, which in the end are guaranteed through Fannie Mae or Freddie Mac, or government loans, which are like FHAs and VAs and RHS and things like that. And that's pretty much it. There isn't really any special programs or like that out there. Kind of the unique thing about the market is that, whether you be a bank or mortgage company, is we're all getting our money from the same place in the end, and that's made pricing very, very similar across the board. So it's really weird in that, pretty much everybody, and I think you've probably seen this with your client, pretty much everybody's usually within a quarter of each other on rate, within a few $100s of each other on closing cost. And the weird thing is that if you called 10 banks or mortgage companies on Monday and rated them from cheapest to most expensive and called the same 10 back on Friday, it would all be mixed up and they'd all be different. So kind of catching that lowest rate is a pretty elusive deal because it changes so frequently in today's volatile economy. Sometimes it changes twice a day. Right. Up or down. So you really just have to be confident that you're working with somebody who kind of knows what they're talking about, understands the market, and has a good reputation in the market. All right,
kind of wrapping it up here, but one of the big differences I think I've noticed with you guys is y'all have your in-house underwriter.
Correct.
What's his name?
His name's Mark.
Mark, and
yeah.
It's like, hey, I have to call Mark. So that
sure.
Tell them how big of a benefit is that? I mean, that's huge in my opinion.
Oh, yeah, absolutely. Yeah. Being a part of Benchmark and having our own underwriter, the guy's name's Mark Strickler, and Mark only underwrites for our branch. So having a guy that we can actually, I can pick up my cell phone right now and call him and be able to get him on the phone when I have a question or I'm not really sure about something, or if there's an issue that I can talk through rather than having to go through a call center where you might get a different person on the phone every time. Just having that one individual person who's a part of your team to be able to talk to just makes a huge difference. It's brought my stress level down and made me a nicer guy. You've probably noticed.
I don't know about that, but I know we did a VA loan one time, probably in 3 weeks.
Correct. Yeah.
What's a typical? I think I want some money off of the realtor on a bet. She said it couldn't happen that quick, but I said I bet you $1 it can. Yeah. What's a typical time frame take on a normal situation?
Normal transaction for us, we're probably one of the fastest in the market. We're running about 21 to 28 days from application to closing. So from the time the client actually comes into our office when they have a contract to we're back sitting down meeting is generally about 3 to 4 weeks. So we're really fast right now. We actually do a 30-day guarantee with our clients to where if it's our fault and it goes beyond 30 days. We'll give the client a $25 a day closing cost credit for every day that we go past the 30-day mark if it's something that was under our control. Obviously, if it's something they didn't tell us or, or if, we can't get an answer from a bank, on a short or something like that, that obviously changes that. But for the most part, we knock them out and get them done quickly. Sounds good?
Brad Hacker, Benchmark Mortgage. I'll put his contact information about right here. You'll see it right there. So thanks for coming in and talking to us.
No problem. Thanks for having me.
Ty Brown, Weichert Realtors, Bluegrass Living, Lexington, Kentucky Real Estate. That's what we do, and we look forward to hopefully doing business with you at some point down the road.